But let's talk about some of the earnings we've witnessed this morning. Let's start with JPMorgan. They posted third quarter profit of $9.4 billion, and those shares right now are under pressure. JPM is actually falling by about 1.7%. They cut their loan loss reserves far less than had been expected. And even Jamie Dimon is saying he hopes the bank can buy back stock before the share price goes higher. There is, you'll recall, a restriction by the Federal Reserve, which has been extended through the end of the year on buybacks and stock repurchases. But again, it's the loan loss reserves. They were less than analysts had expected, as JPMorgan seems to be managing that part of the pandemic crisis downturn economically best. Julie?
Citi coming out with some similar numbers in terms of loan loss provisioning, Adam. They also decreased those provisions compared with a couple of prior quarters at $2.26 billion in provisions in this quarter just passed versus around $7 billion for the prior two quarters. Earnings per share and profit beating estimates, although profit was down by 34%. And remember, Citigroup also reported that $400 million civil penalty about its own self-regulation. Remember, Michael Corbett, the CEO, is going to be stepping down in February. Jane Fraser is going to be taking his place. I should also mention one of the reasons that the stock is down are some new forecasts that Citi's coming out with in terms of its outlook for overall growth. Because this is a consumer-focused bank, and its consumer bank revenue, by the way, was down by 13%. If the economy's not doing well, that's not great news for this company. It's now forecasting unemployment is going to be 6.4% at the end of next year, and that GDP will grow only 3.3% next year, Adam.
Let's talk about the world's largest asset manager. BlackRock continued to grow. Assets under management now reaching $7.8 trillion. Shares of that stock, by the way, right now are up considerably. BlackRock is trading higher, more than 4.5%. Larry Fink was on television this morning, the CEO saying, quote, "I believe we still have more to go on the upside, even in front of probably rising infection rates with COVID-19. Obviously, he's talking about markets. He also believes that most of us, average investors, Fink believes we are underinvested. So once again, they saw an 18% increase in revenue year over year and assets under management approaching $8 trillion